Hello, everyone. Hello, panelists. We're still waiting for one more. There we go, Magnus. All right, great. Thank you, everyone, for joining us this afternoon for our panel on the future of PropTech investing in real estate. Our panelists today include Siim, the CEO of RateTech. His partner, co-founder, was just giving our keynote presentation. Magnus Svantegard from Stronghold Invest, and Ben Lerner from Lerner Associates. Thank you all for joining us this afternoon and for this, what I think is a very important topic in conversation. Just so that you know, we do have a hard stop at 5 for the next keynote presentation, so I'm just jumping right into the questions. Looking over the past 6 months, what effect have you seen on deal flows into the PropTech market? And I guess looking at this, I'll start with you, Magnus, and then we'll go through the other panelists.
Sure. Thank you for inviting me to the panel. First of all, I think you can look into it in 3 different phases, actually. Very quickly, the first few weeks, we got some deal flow about startups that were really concerned that they will run out of money, to be frankly. The second phase was mostly more quiet, I would say. I think most people started to look into their existing portfolio of startups and so on, and the reason. And the third phase, I would say, is after the summer, when the more normal fundraising activities have started all over again. So it's from a Swedish perspective, I would say, or Nordic perspective, it's pretty back to normal, I would say.
Okay. And then Ben, from your perspective, looking more so at the M&A activities in the market.
Yeah, and as I said, again, I'll echo what Magnus said. Thanks very much for having me on the panel. Yeah, from an M&A perspective, again, as Magnus said, certainly after the summer, it seems to be that things are going back to normal. So although there was always some interest from the M&A perspective, it very much felt that the process was taking much longer than normal. So a 3-month deal would have taken 4, 5, 6 months. And although people wanted to do deals still, they often were held up by operational challenges. So meeting founders, which is part of the deal, kicking off DD, planning how to absorb a business, working with the banks to get financing in place. So all of that took a lot of time during COVID, but it seems to me now that that's settled. And again, after the summer, things are slowly getting back to normal. One thing I would say is that what we didn't see over the COVID period, again, as it relates to M&A specifically rather than VC investment, is this massive rush of people. So people were saying right at the start of COVID, we're going to see a lot more of the consolidation that was anyway forecast. But because of COVID and because of people's shorter runways, we're going to see a lot more consolidation, and people are going to take advantage of what's going on. Sellers are going to be looking to sell quickly, and buyers are going to be snapping up things opportunistically. We didn't really see that. So the market stayed resilient. Sellers, for the most part, particularly those with venture capital behind them, the VCs tended to look at their portfolio and help out where necessary. So we didn't see a massive rush of people looking to sell. People did take opportunities on the buying side where they presented, but it wasn't this doom and gloom of a rush of people looking. What we did see, and what we're still seeing, is actually from some of the more established companies where people you would have thought in 5-10 years, owners might look to retire. It's actually those people who are actually thinking, as a pandemic tends to do, it makes you kind of think about life, and they're thinking, well, do I really want to be running this business with all the operational challenges? They kind of sat back and said, maybe now is actually a good time to retire. So rather than those running out of cash, it's actually some of the more established people who are thinking about it, but there hasn't been a massive rush of people.
So you haven't seen, for example, larger companies with more cash looking to buy smaller, maybe startup companies in order to expand their offering to take advantage of some of the opportunities that might be presenting themselves right now?
So you have seen some of that, but that was always their strategy. So the strategy has always been to consolidate for most people, whether they're private equity backed or whether they're just industry players. They generally have a strategy to buy where necessary, and they continue to do that for the most part. They did take advantage of opportunities where they presented, but my point is that we didn't see a massive rush of these opportunities. So it was almost business as normal to some degree. There were some companies who kind of held off buying anything while they kind of took a step back to view the landscape and see what would happen. But for the most part, it remained as normal, and deals just took longer than normal.
And also, I think you may see that going further, because in Q2, I would say that most of those big companies, they were looking at their internal business, the ongoing business, their normal business, and all the risks with the COVID. So they were fully occupied looking internally, I would say.
Yeah, absolutely. In the beginning, the people, certainly with things that I was involved in, people came and said, "Look, we still want to do the deals, but normally I'd have conversations with people, and then you follow up a few days' time. Here, you're following up 10 days' time, 2 weeks' time, and people are busy. But the message was always, we're busy, but we do want to do this. The message originally was, we're busy trying to get people home working, trying to stabilize the business and do that kind of stuff. Then it moved into a phase of, okay, that's settled, but we're actually busy, day-to-day operations, but we're actually taking things slower because, we're trying to figure out how to meet potential new business or how to carry out DD when we can't physically get in a room. And then it became a case of, okay, we do want to do the deal. We've kind of got over that. But actually, now we're trying to work out how we would onboard a new business. And the challenges, you have in onboarding a new business culturally with everyone home working. So all of that kind of delayed the process for different reasons. But to Magnus's point, yes, certainly in the beginning, everyone was kind of, look, before we do anything strategically, we need to stabilize the business, get people home working properly, understand the impact of the business, and then take it from there. But it seems to be now, post the summer, that people are getting back into the swing. And personally, I think this would have probably happened already in June or July. But I think because it was the summer, people said, look, we'll just wait.
Summer. I have to agree with them that actually at the beginning, really the winners were the communication tool providers. Like everybody was looking at ways how to really manage their employees and also the real estate. But now, as people have kind of started already this digitalization process, and they have found out, okay, we can really actually manage things way more efficiently than we did before, then I believe that this actually gives really positive boost for the digitalization of the building in general.
Yeah. Well, what I will say is, I don't normally get involved with venture so much other than advisory and helping people, but I come across a lot of companies that are venture backed. And the one thing that stood out was, without fail, everyone I spoke to on the startups and scale-ups, they said their VCs were being really supportive. Now, obviously, you'd expect that to be the case. They've got a lot invested in it, but they generally seem to be supportive of their portfolio companies, trying to help wherever possible, extend bridging, extend runways, help them out with strategic initiatives and, how to kind of cut costs and things. So it did seem to me that the VCs they were definitely trying to help out as much as they could.
Yeah. And looking at the investments that you have seen moving forward, are there particular segments of the market that you're seeing getting more interest than other segments? So just thinking of the effects of COVID right now, looking at things like remote monitoring or remote working solutions, communications type solutions, or even remote management of building solutions, things like that. Are there segments that you're seeing getting more interest than other segments?
I'll happy to kick off on this one, but absolutely. And I'd put it into two different categories. There's the category of general efficiencies that reduces costs. So everyone's concerned about costs. Everyone wants things to be efficient. So there's that category, and anything that can help the real estate world be more efficient is very hot. The other category is understanding how people go back to work and trying to make the workplace an environment that that takes into account COVID considerations. So things like access to the buildings with minimal contact, understanding who's in the building, being able to pre-book things without having to talk to people. So making better use of the buildings and understanding the use of the buildings is really key. And then general efficiencies and trying to reduce costs is key again throughout the real estate tech sector. I think I certainly have seen less on the retail side as you expect. The retail tech, as it relates to real estate, I'm not seeing so much, but I think the retail has its own issues. But certainly, the key things that I would see is efficiencies and how to understand the use of buildings and preparing the use of buildings with COVID in mind.
Okay, cool. Magnus?
No, I mean, I think both Siim and Ben has mentioned, I mean, the most obvious is communications, applications, and stay in touch with your employees or your tenants. I mean, that has for sure been booming. I mean, it started years back, but the last 6 months have been pretty crazy, I would say, for those suppliers. And also to shift and add extra functionality. For example, monitoring more specifically how many people are in the office at any given time and so on. I mean, one interesting thing is that the EQT, a very large Swedish PA firm, they just acquired both the Casa in Italy and Idealista in Spain, which is resi listing services. So maybe they see an increase in traffic and aim for those services. It's an interesting move.
Yeah. So I would say that to Magnus's point on communications, and that's clearly important. But I think I've seen slightly less on those. People are interested in communications in the office and between employees, and particularly between tenants as well. But the issue that they have is that particularly in these times where cost is an issue, it's much harder to demonstrate an ROI on tenant engagement or employee engagement. Even though it's really important to have at this point in time, whereas actually understanding the use of the building, the way you can save costs on that, and then actually looking at efficiencies and tech that helps with efficiency, those are demonstrable ROIs. And at the moment, with cost being an issue, much of engagement is really important, and people really want to pick up on engagement. From an investment and acquisition perspective, it's just much harder to justify.
Right. And Siim, actually, I've been told that we've got 2 minutes to go. And so looking at you, Siim, from the startup scale-up point of view, how have the last 6 months, 7 months or so been for you in terms of looking at financing the business and making sure that you navigate kind of the turbulent times that are going on?
Yeah. Well, the beginning of the crisis was like really hard because all the real estate was basically like closed overnight, and then everybody, then everything was basically like shut down, and we did also some reduction in our team size, and we just thought that it's going to last for a while. And also VCs also gave us some support to live through the hard times. Right now, we see that this is going up, and as people can really move around, and I think like COVID ultimately gave like very positive boost towards buildings being digitalized faster and accelerating the digitalization process. But in general, it has been quite a lot of like experience, and I think there's also like something to and from the boat, I see. In general, when I think about R8, actually makes the company like stronger. And we saw many other startups actually, going apart. Maybe they had already some hesitation that it doesn't really work out. Maybe the solution is not the market fit one. But we kind of stick together. We had this belief, and all customers believed in us, and then now like going forward like stronger than before.
Great, thank you. And I've just been told that my time's up. For the very short roundtable here, it's obviously a very good discussion, very interesting discussion. Thank you, everyone, for joining us. Thank you, Siim, Ben, and Magnus, and thank you to the attendees as well. We're actually about to roll right into the keynote presentations for the future of architecture. See you guys in a minute. Take care. Have a great afternoon.
Cheers.
Thanks very much, guys.